Fund, their lead tech analyst, Beth Kindig. And Beth, so 2024, 2025, these hyperscalers say we're going to spend X amount of money, and Wall Street looks at it as a positive, right? It has this massive multiplier effect. For every $1 of CapEx spending, we saw market caps go crazy. Now it's having the exact opposite. The four largest hyperscalers say, okay, incrementally they increase their spending by $300 billion. Sounds positive, and yet they lost almost $500 billion in market capitalization. So I guess the question is, how do you explain this, and do you think it's the correct reaction?
Hi, Charles.
Hi.
The market concern is understandable because big tech has moved from being the demand drivers to now being large capital spenders. It's really a role reversal. As you and I have talked, I've really preferred the supplier trade for that reason. However, what I would emphasize is that there are different stages of the AI cycle. We really are in the build out cycle. We are moving into the monetization cycle. So it's not that big tech is going to miss out on AI. It's that big tech's AI moment simply hasn't happened yet. They're later in the cycle.
So let's go to the software, right? That's in the eye of the storm. I used this chart last week. I absolutely love it because it shows labor as labor cost as a percentage of revenue here, exposure to automation by AI, and right smack at the top of the corner, software. So we could see where labor is expensive for these software companies, and they're also greatly exposed to AI. But is it over? I mean, are you buying that all of a sudden, it's all over for these software companies?
I do think there will be immense disruption in the software layer. It's a threat of replacement, actually, for legacy cloud. And legacy, Charles, is really the last 10 years. I'm not talking 20, 30 years ago, as brief as 10 years ago. Now, going back to that big tech CapEx spending, it's not only big tech, it's also these AI R&D firms. And the easiest way for them to make back that capital is to go after the high margin recurring revenue of software. So it's going to be a highly competitive space.
And on this same table, though, right near it, we've got communications, professional services, banks, financial services, insurance companies. We did see crazy action. Expedia, for instance, that stock came down a lot. We saw, of course, what's happening with private equity exposure. If this is the beginning, I mean, how do we brace ourselves as this spreads out?
What I would do is really look at the signals we already have on the market. You take something like Palantir, you take even Meta. Meta has 60 billion run rate right now. There are signals that there are already early winners. And this is not out of dozens. This is literally, I can talk to you maybe about 3 or 4, Charles, out of the large software universe. To me, that's a great opportunity for investors,
right,
because there's a material difference between those participating right now and those not.
All right, so you mentioned Meta, also Palantir, which acts really great today, and CoreWeave also is on your radar in this area.
When it comes to Palantir, what I would just say is we track earnings reports very closely,
Okay.
100-point checklist. Palantir is the best earnings report I've seen so far in software. This company is accelerating. And now you can give me a tech company anytime, Charles, that will put up 1 or 2 good quarters. But when we're talking 6 quarters, 7 quarters, that's very rare. When it comes to CoreWeave, they are taking on the big 3. They are AI optimized infrastructure, similar to how big tech is in that build phase. CoreWeave will eventually be in the yield phase. It's more of a medium-term to long-term winner that I'm watching very closely.
Okay. Hey, let's talk about this. A lot of talk, of course, now to shift from training to inference. You've talked about this. You've kept us ahead of the curve, but now there's a little bit of, I guess, a debate, if you will. Who benefits most from this? Will it be AM Advanced Micro? You got a lot of ink last week at the expense of NVIDIA, but I also saw what you wrote recently about Broadcom.
All great questions, Charles. When I look at the AI chip market, the pie will just keep getting bigger and bigger. Keep in mind, NVIDIA is the whole pie right now. So basically what that means is NVIDIA will have to give up some of its large market share. And that's an opportunity for AMD and Broadcom because it's no longer compute intensive, which is really where NVIDIA rules. They dominate on the compute intensive workloads. Inference opens that up for both AMD and Broadcom. And it goes back to the margins that big tech will have to address. They want to get cheaper AI accelerators, and that's what AMD and Broadcom do.
I got a couple of things before I let you go. I love our conversations. I'm going to pull back a little bit here in the Mag 7. I don't think there's any irrational exuberance as you know, going back to 2000 when they exploded, when their market caps went crazy, when their valuations went crazy. Only 2 of them beat the street last year, and I don't know if any have beaten them this year. So I guess the question is, should we be looking at them or continue to keep them on our radar?
On an individual basis, I would pull out Meta and I would pull out Google. Google is an earnings report that also accelerated in Google Cloud. Those two, I would call them giving us very early signals that they are positioning well.
Okay.
When it comes to Amazon, Apple, goes back to what part of the cycle will big tech dominate? And I believe it's really that inference market that's incoming that you and I just spoke about.
And I got to ask you about Bitcoin. You know, I don't know what's going on. I love the story. I love the narrative. I love the potential for many of the reasons everyone else who loves Bitcoin does. But I have no rhyme or reason for this. And I'm used to the pullbacks. I've been watching them for about 20 years or so. But what's going on here?
Bitcoin was one of our best calls last year because we put out a public webinar, only one of the year, and said it was topping in August. So we drastically cut our position. But with that said, Charles, I am a Bitcoin bull. I am long Bitcoin. I just think that that position and many tech positions require risk management, and therefore it requires that active stance. And I would happily move back into Bitcoin when the signals
Okay.
more.
All right. So those folks who are just simply holding maybe become a little bit more nimble in the future.
Bitcoin's going up over the next few years. Yeah,
Okay.
directionally, extremely bullish.
I got you good. Beth, thank you so much. I always appreciate your expertise. You're the best.
Thanks, Charles.
All right. So from software eating the world to software